We're going to start the Chapter 9 notes talking about business income and deductions. Since we're talking about this from the individual perspective, everything in this chapter is on Schedule C. So let's just make a note that we're really talking about Schedule C. These are all 4 AGI deductions like we've talked about before. And like I said previously, they're 4 AGI deductions because what happens on the Schedule C is it's summarized above the line on the 1040. So business gross income. The rules for determining business gross income are generally the same as for determining gross income for individuals. So gross income includes all income from whatever source derived. So all income from whatever source derived. And we're looking for specific exclusions or things like that from the Internal Revenue Code. So income from a business includes gross profit, which is gross profit revenue minus expenses. Okay, revenue minus cost of goods sold in this case. Businesses can have income excluded, for example, municipal bond and interest, just like we've seen before. So we'll just add muni bond interest as an example of an exclusion. So it's an exclusion for non-businesses, so for individuals, and then for individuals who will be using a Schedule C. The income concepts from Chapter 5 that we've seen previously apply here. So the criteria for deductibility, we have a couple of terms that we need to talk about, and they are ordinary, necessary, and reasonable in amount. So businesses are allowed to deduct expenses that are incurred to generate business income if they are ordinary, necessary, and reasonable in amount. So ordinary, the ordinary term is defined as an expense that is normal, common, and accepted under regular business circumstances. It depends on the type of business, so it's kind of a case-by-case situation, and it does not have to be recurring. So it doesn't have to be recurring to be considered ordinary. So the example that your text provides here is you have legal fees for a lawsuit. And even though a lawsuit may only happen one time, it's not recurring, that is a normal expense that you would incur under those conditions. All right, necessary is an expense that's helpful or conducive for business activity. So it's going to be appropriate is how we're going to think about it, and helpful for the taxpayer. And I abbreviate taxpayer, TP. So the reasonable expectation that the expense will help the company make a profit. An example of this would be KPMG sponsoring Phil Mickelson. So he's a professional golfer, and KPMG spends money making sure that Phil Mickelson's wearing their KPMG hat whenever he's golfing. That gives them exposure and, something like that. The expenditure need not be essential. So I want to add here that it doesn't have to be essential. So it's not really essential that KPMG sponsor Phil Mickelson, but it does help their business. Exhibit 9.1 in your textbook has several examples of ordinary and necessary business expenses that you can look at. In terms of reasonable in amount, ordinary and necessary expenses are deductible only to the extent that they are reasonable in amount. So they can't be extravagant. And we look at how an arm's length transaction would have gone down, I guess we want to say. So if the amount of the expense is the amount typically charged in the market, then it is considered reasonable. So this is typically only an issue when you're dealing with a related party or if the taxpayer receives some incidental benefit from the expense. You have to think about what a profit-motivated taxpayer would pay, and any amount that exceeds that arm's length price is not deductible. So we'll add that the excess over the arm's length price is not deductible. All right, let's talk a little bit about non-deductible business expenses. So, expenditures against public policy. Here we're talking about bribes, kickbacks, fines. In several countries, especially as we do more and more business internationally, it's normal for a business to pay bribes. And that's kind of how they go about conducting business in another country or wherever they are. And even though you might say, well, in that country, it's ordinary and necessary that we have to pay this bribe. The bribe is reasonable in amount. We don't allow bribes, kickbacks, or fines to be deductible. So the idea there is that we would be subsidizing illegal activity. The next one is political contributions or lobbying costs. So non-deductible to avoid the appearance of impropriety, and we want to avoid the perception that the government subsidizes the taxpayers' efforts to influence politics. So political contributions and fines, kickbacks, and bribes are very common non-deductible business expenses. Capital expenditure. So a company must capitalize expenses to purchase assets with useful lives of more than 1 year. You have to capitalize these expenses and then deduct them over the useful life through depreciation. So they are deductible. I'm going to say they are deductible, just not immediately. So you're going to have to deduct it through depreciation rather than deducting the entire amount of the purchase of the capital asset. Number 4, expenses associated with the production of tax-exempt income. This is not allowed as a deduction, so it makes sense from the standpoint that the government is already giving you a tax break by not taxing the income. You're not going to then get to deduct expenses to help generate that income. Okay, so we have an example, interest expense on money borrowed to invest in a tax-exempt bond and life insurance premium. Because both types of income are excluded from income, we don't get to claim those deductions. All right, number 5, we have personal expenditures. They're not deductible unless they're expressly authorized by law. So not deductible unless expressly authorized by law. So we have an example. Gabriel is a self-employed taxpayer and owner of an IT solutions company. He incurred the following expenses in connection with his business in 2018. We're assuming Gabriel's a cash basis taxpayer. And the question is, what is the total business expense deduction Gabriel can claim when filing his 2018 return? First, we have salaries for the employees, office supplies, a speeding ticket while making it to a service call on time, new computers for the office, depreciation on the computers, lobbying expense to promote the installation of a fiber optic network throughout the city, and then rent for office space. So A, we have the salaries for the employees. We're going to include those as a deduction. B, office supplies. We get to deduct the $980 in office supplies. C and D, so I'm going to try to mush these together. The speeding ticket, nope, that's a fine. D, the computer expenditure. We will get to deduct the cost of the $8,300 in buying the new computers, but it has to be done over time through E, which is depreciation. So $1,375 in depreciation. The lobbying expense, nope. Even though it's related to the business, it would be helpful for the business, not deductible. And then G, the rent on the office space, $36,000 is deductible. So the total amount of business deductions that would be allowed are $298,355. The wages, the office supplies, the depreciation on the capital asset, and the rent for the office space. Don't get to deduct the speeding ticket since it's a fine or penalty, the capitalized cost of all of the computers, and then finally the lobbying expense not allowed.